we begin to overcome. We begin to overcome. Make sure this audio is good. There we go. I wonder if I can pull up the actual chat. Pop out chat. There we go. Let's see here. Let me know if you can hear me in the chat. 'Cause my audio's been tripping lately. Just type some in there and I'll start if you can hear me, because you might not be able to. Yeah, the mic's on good. We begin to open. I don't want to even start if you can't hear me. We begin to. Give it some time. Give it a little bit more time. I'm just gonna go ahead and get right to it. Mm-mm-mm. Make sure to get some of this stuff actually set up here. so weird. All right. Screw it. Just gonna go ahead and start it up. Ralphie, if you in here, I'm gonna just get going because I don't know why that shit's not really showing. It says one viewer now, so that's maybe you. But before it wasn't showing anything. So let me make sure this is live. We're good. But yeah, I actually wanted to go over something real quick. Show kind of what I did today. I'm not sure if you got me on like Twitter or anything like that, but pretty much at the beginning of the week, I had went over this portion. Close this door a little bit. I went over basically what I expected like price to do at the beginning of the week. This was like Monday, yeah. So this is kind of what we had, and I'm not sure how far or if you do a lot of trading or anything like that. But when you look at price, to really explain it simply, if you ever see price kind of making like a downward stare, right? Like, lower low, lower high, lower low, kind of like a staircase, right? In this case, I just pretty much expected price to make a new low, right? So in this week, I was expecting what I had in this here, right? To take out these lows and then go from there. Price did that pretty quickly, like at the start of the week, right? So I'm gonna actually go to the weekly here, hide all this crap. Yeah. So as you can see here, this is the picture, right? These are weekly candles. So each of these little sticks or candles are 1 week. This week, as my target right here, it's been doing exactly what I expected. It's just kind of making that downward stare, right? So at the start of the week, I was already expecting to find trades that can help me kind of form that sell downward, okay? At the start of the week, and this is the day, now these are where each candle are each day, right? So if you can see here at the bottom of my screen, kind of like down here, you'll see the days. So you have like Wednesday, right? Tuesday, etc. And one of my analysis here on Twitter, after I seen that the lows got taken here, this is on the daily now. This was, let me show you here. This was that day right here, Monday. It took the lows I was talking about on the weekly chart. And my guess was that after the lows has been targeted, we can see price move upwards to fill in these areas, okay? Price has like this, candles usually do like two things, basically. They'll either take out highs or lows, like these extreme areas. And once it does that, if it takes one of the extreme areas, it usually finds like these little areas, we call it gaps, where there's nothing to the left or the right of it. So you kind of can guess what it's going to do next, basically. So once it took these lows, I already knew it was going to come back up here and fill in this gap. Let me see what you're talking about, Ralphie, because you probably not can't even hear me. Yeah, I'm popping in and out because I don't have an account. They're weird about the numbers. Okay, gotcha. Yeah, I didn't even know that. I have to consider that then. Maybe try to find a different platform to go live on. YouTube is the only one I can figure out because I don't know how to do it on Instagram the way I would be able to do it here, but I'll figure that out. But basically, let's see here. Let me see. Ah, okay, I see what he means. Gotcha. You just have to hop in and out. That's annoying. Yeah, sorry about that, Ralphie. I didn't know. I probably gotta consider that for sure. That some people don't have YouTube accounts. and stuff like that. But basically what I was saying though, right? Price, I took out the lows like I wanted, so I expected price to go back up here to fill in these little gaps here and then just continue the movement down, kind of that downtrend. And that's exactly what it's been doing, right? It went right here. If I zoom in, it went, took the lows, and it went right back into the gap. And that was these gaps up here, just these little areas. So did that. Now these are each day, right? So I'm pretty much waiting. Like here, Monday, Tuesday, after this taken down, I'm literally trying to play like a counter trend move. Like I'm trying to like buy and shit like that all the way up into this area where I know it'll stop at, and then I'll take the sell. Today I caught a sell down. Because once price does something like this, where it makes like a big candle showing you that it wants to go down, usually the next candle might be like a continuation move. So today, Thursday, as you can see at the bottom, I was expecting sells. So with that being said, right, just to kind of jump into what I saw today, and I actually messed up today, to be honest. I made money, but I could have did way better, to be honest. Could have did way better. But basically, we always want to trade, like always trade during New York session. Okay. New York session is like the best time to trade. You can trade during London. So just to give you a better backstory on that, London session is like between this time, right? 2 a.m. to about 5 a.m. Technically, London goes all the way into like 12 p.m. and that's when it truly closes. But as far as like when you'll find an actual trade setup for London is 2 a.m. to 5 a.m. And then like for New York, our time, the best time to trade is like anywhere between 8:30 a.m. all the way until about 11 a.m. This area. That's when you'll find an actual setup. Usually. Not all the time, but usually. So in this case, I was looking at here, I came to the chart, it was about 8:30. You have to keep a lot of things in mind because 8:30 is when like the Forex market opens, and then 9:30 is when like the actual New York stock exchange opens. And I'm trading here the NASDAQ, NAS 100, okay? The NASDAQ is obviously more in the stock, right? So usually you'll see like crazy price swings. Like at 8:30 when one market opens, you'll see like a big candle. You see this, how its candle is like huge compared to some of the smaller ones. You'll see like big price movement. So this is when some people try to find a move around that time. And then 9:30 a.m. or 9:30 right here, right? You see how this candle kind of just went like up and down. It does crazy stuff. And then it just starts going crazy, right? So that's the time to usually wait out. I usually just wait for 9:30 because I know that, you know, price has kind of figured out what it wants to do. It could be crazy trying to trade something like this that's really in the equity market, trying to trade it before it opens technically, right? You want to wait until the equity market opens, it figures out what the hell it wants to do, and then you can try to pretty much ride the train, if you will, right? So a lot of the times, this is something that most people don't know, but if you see something like this on the chart, right? Like a lot of the times, sometimes for whatever reason, I don't fully understand why it does this, but I just know price reacts from it. So when you see shit like this, you really want to like keep an eye on it and form your trade around it. Because usually it'll go into this area, fill in this little gap. It's kind of like what I said earlier. When you see a big candle with nothing to the left or right, price likes to go into those areas and rebalance price is what they call, and then continue the move or continue what it wants to do. So when the market opened and I see it filled in this area, I was like, okay, this definitely wants to go down. So at that time, there's something called Fibonacci. Not everyone does this. Fibonacci is really simple. I mean, it's just literally like you taking a thing. It's like a measuring thing, and you're going from one extreme to the other extreme. I'm explaining that a little bit better. So basic market structure. Let me dial it back a little bit, right? I'm gonna go to a bigger chart just to explain this a little bit better. So like I was saying about the stairs, right? How it stairs. Anytime you see price make like a high, then come make a low, then go and then keep going. Well, in this case, it would be this low. But these are called swing points. Okay. So usually a swing point is like, in this case, it would be kind of like a triangle, if you will, right? You have one candle that's low, and then you have one candle that's the highest point. Then you have another candle that's low, right? So if I was to draw it out here for you, let me see here. Yeah, like with this brush here, I'm gonna go all the way over here. It's kind of just like this, pretty much, right? Like if you think about it, it's just a up, down, upside down V, right? And then if you were looking like at a market that was going up, or you want to see a low, it looks like that. So if we go over here, that's what this is, right? It's a V. It's boom, boom. And then this is the upside down V, right? Boom, boom. That's swing points. So a lot of the times when you see something like that, price is going to play around in this area. That's all you need to worry about. You don't need to look like, you want to figure out what it's doing overall, of course, but that's the most important part. You're looking at that area of price. Okay. So I just wanted to explain that a little bit to show you why I was kind of like playing that area. Most importantly, let me go ahead and see if I can remove this stuff. Oh, never mind. It's making me draw. Here we go. All right. So for me personally, everyone trades different. You can use any time frame. It just depends on how you trade. Like if you're a person that wants to hold trades for days or weeks, or a person like me that wants to be in and out in like, a day or a couple minutes. I always look at what the week's going to do, right? I look at the weekly candle, kind of see what it's been doing, so I know what to expect for the week. Then I look at the day candles because I want to know, okay, what do I need to be aiming for today? And then I'll go straight to the 15-minute usually. The 15-minute is where, if you're a scalper, which is somebody that basically wants to just make quick moves, get in and out, or if you're an intraday trader, which is somebody that likes to like hold moves only for a day or just a session, this is the best time frame to be on, right? So like I said, if you look at price here, we have that upside down V again, right? We have one candle that's low that has a high here, one candle that's up here, and then another candle here. It just makes a V. If you look at a candle, just so you know how to read a candle, make this very simple here. Try to see if I can make a candle for you. So usually like when you actually pull up a chart, they'll be green. I'm going to do this for you real quick so you're not lost. Get real creative here real quick. Oh no. Boom. Show you how to read a candle. Maybe I should have talked about that first. Okay. And my candles are edited, so that's why you see like white and black or white and gray. Usually when you pull up a regular chart, there'll be a standard color, like green is like it's a buy candle, means it's going up, and then red is like the down ones, right? So I'm just making like some fake candles for you. Move that over a little bit. All right. So with candles, right? With a buy candle, this area here, see, let me get an arrow. Yeah, here we go. So this one right here, the high of a buy, this is the high, right? And that's just for any candle, even for a sell candle. These little lines at the top, This is the high of the candle, and this is the low of the candle, the wicks, right? The difference between each candle now is pretty much the open and the close of the candle, okay? So with a candle that is a buy candle, which means it's going up, usually it opens down here, right? Kind of the bottom of the green part, not where the black line is, right? Not the low like we talked about. I'll actually depict it for you. So this is the low. And then the high, right? And that's for each one, right? So this is where it starts getting different. Right here is the close of the candle. This the end of this green part up here where the box closes. And then this is the open. Okay? But that's for a candle that is going up, a green one, right? In my case, it's a white one. Now, when you look at a sell candle, the only difference here is the close is obviously going to be down here now, right? Because we're going down. So the candle will open up right here. It'll go up to a high, right? That's the highest point the candle went to, but then it kept going down. So that's why we leave that there. That's all that is, right? So like, for example, in a buy candle, when it opens up here, that means it went low after opening up, but then it decided to push back up and went all the way up here. That was the high of the candle, and then it came down and closed. Okay? In this case, we have a down candle, right? So it opened up here. It kept going, it opened up here. It went up a little bit, but then it said, nope, I want to keep going down. Went all the way down here, made a low, and then closed, right? So that's how a candle works. That's what all these sticks are. So when I'm saying like a swing or like these upside down V's and all that stuff, all this is you want to see a high of a candle, then another candle that makes a higher high, and then another candle that makes a lower high, right? So now you have that V, upside down V. You know that's a swing point, okay? And then at the bottom, it's different, right? So now you want one that has a higher low, then a lower low down here, and then a higher low, a regular V. So that's just basic swing points, just to give you an idea on that. So today, I knew that we were playing in this range because right when I came to the market, like I told you, I trade at 9:30 this candle. I seen that this was the high and this was the low for the day. Boom. And then it hit that. At this time, I was looking for something, right? There's something called PD arrays, basically. All it is a fancy word for a place that you're looking to trade at, right? Like an important place where trades happen. And there's many different ones. Like I showed you this one here, gaps. That's one area that price usually reacts from. There's something called order blocks. There's a lot of things that I can really go into. But I don't want to like overcomplicate and confuse you, right? I don't mind helping anyone. Like if you have a million questions, just like put it in the chat. And yeah. Oh yeah, I forgot you probably can't even chat because you don't got YouTube. But to get to it, I measured out this. This is something called a Fibonacci tool. And it really helps like for any trader. You could be a beginner and it'll help you so much because going from here to here, it'll tell you where price is more likely to react from basically based on mathematics, right? So to plainly, simply explain this 0.5 area is just the halfway point of the entire range, the swing range I showed you, right? The high, the low. So this is the halfway point. Usually when price is like doing this, for example, and then it comes down here and then decides like, okay, we're going to start playing in the range and starts making its move back up, it will go past the halfway point into something we call premium, like these red lines, right? Everyone has it depicted different, but this is a premium place you can sell. Think about it like if you wanted to sell some shoes, you don't want to sell it at a discount. You want to sell it at the highest price usually, right? A premium price. So that's the same thing here. If you had something different where if you had like, I don't know, let me find like a market that's going up. I'll just give you an example. Yeah. So if you find something where it's like going up, then you would take that same measurement and you would do this, right? So we still got the halfway point. If price wanted to come down, when it's going up, we just call this area discount, right? Because when we want to buy something, we want to buy it at the lowest price, buy it at the discount. Okay, so an easy rule for some people that want to trade is like if you're looking at a market that's just constantly going up, just don't buy it unless you're in a discount. That'll save you a lot of losses, basically. All right, but basically I had that down, right? So right when it got here and it filled in that area that I was talking about, I always go down to the smaller time frames. This is where you would enter the trade, and it gives you like the best entry so that when you put your money in, you're not risking a ton just to make a little, right? You're risking a good amount that can result in a lot of dollars or something. So in this case, I've studied price for like 4 or 5 years, so I kind of know how to get in like right away or at a good spot. So when it was in premium, I'll give you a kind of a tip. And I know I'm throwing a lot at you, but you know, the more you'll watch, if you do hang around and stuff, you'll definitely understand what I'm talking about. It's not as hard as what it sounds like. If price gets into this area, 75 or 62, that's the area you just want to probably pull the trigger. Like if you want to be safe, that's what we call optimal trade entry. It's the best place to trade. Sometimes they'll go to the last red line right here, the 79. Everyone has their little thing a little bit different, but usually you'll see price always come up in these areas and then just make a move for whatever reason. It's like mathematically proven. I don't know why, but shit, it works. But right when it got up to here on the 15-minute, I go to my smaller time frames and I basically look for my entry model. And everyone has a different way of making money. I learned from something called ICT. So I have a certain way to enter the same way every single time. So when I got here, it was making this move. In order for you to know that price is like making a move or changing, you see how price was like going up. So some people ask me like, how do you know it's going to actually turn around? Well, I wait for confirmation, right? So when I see one of these lows here, remember I told you the V's, these are swing points, but just on a smaller time frame. This is one regular V, and this is the upside down V here, right? So once I see that low get taken out, and I'm like, oh, okay, now I know that the direction is changing. It's not doing the same stare no more. It wants to make a down stare now, okay? So right when I see price or this candle right here, 935, take this low, I knew that I needed to start looking for a sell to get in. So I actually trade on the 1 minute. Some people think it's crazy. It's like each candle is 1 minute. And it kind of is fast, but you have to have experience. So here you can see it's even clearer, right? Like we have one big V and then one clear high, right? So right when it cleared here, it came back up here, and then this is where I got in at. I actually got in right here. Okay. The thing I told you about with the weekly chart, how like price likes to take lows and then come back up and fill in gaps, it happens on every time frame. It does not matter. So the things I use on the bigger time frames, I even use when I enter as well. So right when I see it took this low, what did it do? It literally went right back up. Before these candles were here, there was nothing to the left or right of these candles. This was a gap. So once it takes the extreme areas, it usually wants to fill in gaps and then just keeps doing the same thing over and over again. So I got in right here just to be safe because you don't know when it's gonna like stop. Sometimes it'll literally just touch like a piece of the gap and then just leave you. So I don't even play. Like I just try to play it safe and get in. And then this is what we call a stop loss, right? So this is where you protect your money. You put the amount you want to risk, right? Whatever the money you have, if you have $100 account, $1,000 account, whatever you have, and then you say, okay, if price turns around on me for whatever reason and takes that out, just take me out the trade. And the system you trade on will just take you out of the trade so you don't like blow all your account, blow your money. Most of this game is just risking the right amount of money because you never know if you'll win or lose in this game. So right when I got in, I was actually aiming for all of this. I'm going to show you exactly. And this is where I have to learn to get a little bit better. I was aiming for these lows. I wanted to take out this. So 3.11 just means that I was going to make 3 times what I was risking. So if I risked $100 on a trade, I would have made 300 here. But if I lost, I would have lost $100, of course, right? Or if you have a $1,000 account, you would have made $3,000. Or no. Well, if you had a $1,000 account, it just depends on, what you want to risk there. But if, let's say you wanted to risk $1,000 on this trade, right, you would have made $3,000. Okay. So it's something like that. That's exactly how it is. Very simple. So in this case, 3 times. What I end up doing though, and this is what I have to learn from, is right when price started doing this right here, you see how I tell you when price starts like changing or it starts taking away, like it doesn't want to do the common stairs. I seen price was making my little highs, right? The little upside down V was making that regular V. So I was like, okay, cool. But then it did this. It broke one of those highs. I was like, oh crap, it's about to start going up. So I kind of panicked. I got out. I got out. And that's something that in this trading game, it's 80% psychology, 20% skill. The learning of it only takes a couple months, probably a year or two, maybe. But the rest of it is just you dealing with psychology and fear and stuff like that, because it's your actual money you're playing with. So in this case, I hopped out. So I only made, let me see here. Yeah, I only made 1.57 times what I risked. So almost 2 times. It was still decent. I was still happy. I'm like, okay. But point is, I could have went all the way down here and made 3x or even more, right? 4 times, 5 times. You see price is still going over here. And it just turned around over here. But the lesson I'm saying is here, if you get in this game, once you learn a style to trade, whether you learn from me or someone else, I can definitely tell you, I tell people all the time, I was in here for 4 or 5 years of doing this. And a lot of the time I was in, Ralphie, was just literally like learning from the wrong people. That's majority of the time, is trying to find something that fits for you and learning from someone that actually knows what they're doing. So like a lot of people I work with or that I will help in the future, I'm just going to give them the best stuff possible. Like I'm not even going to fuck around, because it's frustrating when you're doing this shit for years and you ain't seeing no results. But now I'm at a point where I'm actually seeing results. Like I'm just getting there, to be honest with you. But so these are lessons, right? There's a lot to it, obviously, like I explained, understanding like how a candle works, understanding what's a high, what's a low, what range you're playing in. There's a couple of things to take into consideration, but once you figure it out, this shit is not that hard. It's about testing the strategy that you do and then seeing how much you win. Right now, I would say like my win rate is between 55 to 60%, which is pretty good, right? Because if you think about it, let's say I win 3 times this trade, right? Usually I win 2 times to 3 times what I risk. If I do that 50 or 60% of the time, my wins are easily going to outweigh my losses, is what I'm saying, right? So this is not a game where you have to be 100% correct. You never will be. But as long as your win rate matches how much, or actually beats how much you're risking, which usually it will if you're over 50 or something, like over 50 or 60 is actually considered very good in this game. Most people are 30%, 40%. So it just depends on how much like time you put in. But yeah, that was pretty much it, man. Like a lot of this stuff, if you ever were curious and like wanted to just sit down or like, I don't know. I know you said you wanted to kind of try, watch, and learn something you don't know. I'm more than willing to just like show you stuff. I ain't charging people out here. I will get to that point later, right, when I have my own business. But I'm just at this point where I'm growing. I'm trying to help people. There's a lot of shit going on in the world. I think people need to know how to make money other ways. So I'm just trying to help people out right now. I wish you were able to say something in the chat though, because I want to know like what questions you got, man. Because I know I threw a lot at you right now. Maybe if you have any questions, just send it in the Instagram real quick while we're here. And as a matter of fact, I don't even know. Like, do you even invest or anything? Because I can easily like show you or pull up some stocks or pull up whatever you actually like are into, and I can help you kind of understand like what's going on there. It's not financial advice, of course. I can't give that, but I can at least show you like what the chart looks like if you are in anything like stocks and stuff like that. Take all this stuff off. Let's see if, yeah, that's crazy that I really got to figure out a different way.